Wilfred?
Yeah.
Can you, I made you a presenter, but
Okay.
can you see that you're a presenter?
Yes, I can see.
Okay, I started the recording. Sorry about this.
Okay.
Okay.
Can you see me? Or
That's
just
the
my...
thing, I can't see you.
Okay. Right.
I can see your circle.
Yeah, but you can't see my face.
Okay,
just hang on. I just want to get my son in here quickly.
Because that's on the UNISA one. Let us see who was here now. Let me try on the guest one.
I am here, Claudine.
Oh, Sivu
I'm
is
here.
there. Sorry, I see him. Okay. Sivu, sorry, but there's two email, there's two links for Mr. Lesh. I think the one doesn't work properly.
I've turned it off and then I switch it back on again. Yeah, now she gave me. Yeah, now she gave me. So, the camera. Yes, yeah, no, the recording that is started already. Okay. You see that light is supposed to go on. No. You can now also you should have the rights to for the screen. Claudine,
yes.
Can you hear me? Can you hear me, Claudine?
Yes, I can hear you.
Okay.
Sivu is here.
Something needs to be done as far as my my camera is concerned.
Okay, Sivu is there. But Sivu?
Hi.
When Mr. Lesh was on as a guest, the other address, it showed his camera. I think we need to update the guest status and not this one.
Okay, I think the LW that is here is not him, Claudine. So let me see if I can find him.
For this module, it doesn't link to his MyUnisa address. We must use the other one, the one that right at the bottom that showed him as a guest. WN Lesh guest.
Okay, let me
Scroll
see.
right down to the bottom here. You'll see. So you must leave and come back as the guest rather. Okay, but I request to join and then he clicks accept. Because that's how I got Aziza on her system. And then I made her presenter.
Oh, man.
Sorry, students, about this. Wilfred, don't you want to leave quickly? I'm going to call you on this other one.
Okay, I'm going to leave.
Yeah, I'm going to call you on this other one, but Sivu easier. And then it will pop up and you say accept.
Right. Now it's not still the same. It's still the same, Claudine.
Okay, so we'll respond there on the guest.
Okay.
Now see if he's going to change your status now.
Okay.
Just give me a minute.
Okay, students, we're just having a little bit of a connectivity issue to get Mr. Lesh on as a presenter. While we just sorting out, it's just going to take us a few minutes. Can you please complete the link that I pasted in the chat? Can you please complete the attendance register? And then the session will start.
Mr. Lesh, I think the issue is with your camera because you are a presenter according to me.
That's
Under
correct.
presenters, there's only 3 names. There's me, there's you, and then there's Claudine.
Yeah.
I think the issue is with your camera. Can you try and share something? We'll see if that happens.
Can
Because
you
on
see
my
something
side,
now?
it's showing you as a presenter.
Okay. Can you see something now? I've shared something.
Yeah, we can see the. We can
Yes.
see it, sir.
We can see your presentation. We just can't
Okay.
see your handsome face.
I think what I'm going to do is I'm just going to present without you guys seeing me, and then we take it from there.
Okay, yeah, because we know you don't like to be late. You like to start on time. So I'm also,
Okay.
we're going to leave so
See.
long and we see if we can sort it out. But maybe tomorrow morning we just meet a bit earlier to sort it out for tomorrow.
Yes, please, man. Okay.
Okay.
Right.
Okay.
Let me just get
Okay.
going then.
Thank you, students. Sorry
Okay.
about this. Sir. Okay.
Okay, not a
Thanks.
problem.
Bye. Bye.
Right. Good evening, students. Apologies once again for everything and all the gremlins here. Let us just get going with the with our lecture. And as somebody has indicated today is lecture number 3. Today is lecture number 3, and I hope that you guys received your notes and that you have printed that out, and we are going to take it from there. In today's session, we are going to have a discussion on the partnership still. And today we discuss the partnership, admission and retirement of a partner. I turn you to your PowerPoint slides. So as indicated earlier, we are discussing admission and retirement of a partner. Now, when we speak about the admission or the retirement of a partner, this study unit deals with a change in the ownership structure. And a change in the ownership structure can only occur when we've got an existing partnership and one new partner joined us, or in the event of an existing partnership and one of the partners retiring, or in the case of when we have got one of the partners that will pass away. Now, as you guys may know, any change in the ownership structure, whether a new person joins or whether one retires, or in the case of a death of a partner, a new partnership must be formed, because any changes in the structure of the partnership will lead to a change in the ownership and in a change in the business as such. So if we have got 2 partners who share equally in this business now. It could be that they have got an equal share in the business and they admit another partner. Then obviously the partners can't still have an equal share in the business. And because the partners cannot have an equal share in the business when a new guy joins, we will have the first situation now in this study unit. And the first thing that we discuss is what we call the changes in the profit sharing ratio. Okay. So when a new partner joins the partnership, a new profit sharing ratio must be calculated. So what we are going to do now is that I'm going to take you through the various situations that we can have whenever you must calculate the new profit sharing ratio. So back to our notes now and our slides, and we are focusing on the first scenario that we do get. I've indicated this now as question number 1. I've got two partners, Abel and Barney. They are in a partnership, and this partnership is trading as funfair traders. They share profits and losses in the ratio of 1:1, which means that each partner has got an equal share in this business. They agreed on admitting a new partner, which is partner Carr, and it was decided that Carr would obtain a quarter share in the business and that the new business will now trade as ABC Stores. Abel and Barney, which is now the original partners, they will relinquish the quarter share that they are giving it over to Carr. They will relinquish that quarter share equally. So that is the situation that we have got now. So the question is now, you must now calculate what is the new profit sharing ratio. So if we are now going to calculate the new profit sharing ratio, I'm taking you now and I want you to go over now to your worksheets that I've also given to you guys. There's a file called your worksheets now. So let us take a look at this scenario now. I have got two partners now. Just want to make it so that you guys can see here. I have got Abel and I have got a partner called Barney. These are the two partners in the original partnership. They are trading currently and they are sharing profits in the ratio of 1:1. They admit a new partner, and the new partner that they admit is partner Carr. Now, Abel, who had half a share because they're sharing equally, so if I must indicate now what they do have currently, is that Abel has currently got a half a share, and Barney has currently also got a half a share. That is what they currently have. They now decide to admit partner Carr now, and partner Carr is coming in. Let me just make that a little bit bigger for you guys to see there. Partner Carr is coming in, and according to our question that we have got now here, we say that partner Carr is now going to get a quarter share. Let me just indicate that now to you. The new partner is getting a quarter share. Not working so well, but we will get it right now. Now, in order for partner Car to get a quarter share, Abel, who had half a share, will have to give away something. So partner Abel, who had a half a share, must give away something. He must relinquish something. So it is a minus in brackets. And he is giving away hey, this is not working so well. Okay, I'm just going to work there. Okay, so Abel, who had a half, will have to give away something. Put that portion that he's giving away, put that in brackets. And Barney, who also had a half, will also give away something. So that the new partner, who is now partner Car, can get a quarter share. Now, in order for partner Car to get a quarter share, Abel, who had a half, we're going to minus now the quarter share that they are going to give to partner Car. However, it is stated that they will relinquish the quarter share equally. So of the quarter, Abel is going to give a half of that, and Barney, who had a half, is going to give a quarter to partner Car, but Barney is also going to give that now a half of that. And that is how we will now have our profit sharing ratio and the calculation on that. So let me just explain this to you as it is now. We have got Abel. We have got partner Barney. We have got partner Car. And you need to understand the following now, that Abel had a half. He is now going to give away something. Partner Barney had a half. He is going to give away something. They are relinquishing a quarter share to partner Car. So partner Car is getting a quarter share, but that quarter share, Abel is giving half of that, and Barney is giving half of that. I just want to turn the students now, guys. Just go back now to the slides. Just go back to the slides, and I just want to highlight a few things for you on the slides and what you must look for in a question like this. What you look for is the current profit sharing ratio. That is important. You also look for the share that the new partner is going to get, and you take a look at how they are giving that quarter share to the new partner. Those are the three things that you are looking for. So once we have got that now, and we establish that now, we can get back to our calculation that I'm busy with now. And take a look at this now. The half is the current profit sharing ratio. A quarter is what the new partner is getting. And a half is the way in which partner Car is now going to get his quarter share. So I am now going to simplify this now. And if you simplify this now, it will be a half minus a quarter times a half is equal to 1/8. And if we go to Barney now, Barney had a half. And he is also going to relinquish now a quarter times a half, and a quarter times a half is 1/8. And partner Car will still have his quarter share. I simplify this now further. I've got a half minus 1/8 for partner Abel. Partner Barney, a half minus 1/8, and partner Car will get a quarter share. I am simplifying this further now. I'm looking for the common denominator between, take a look at 2 and 8, and 2 and 8 and 4, and that will give you a common denominator of 8. So I am now going to put all of these equations over 8, and I will now have for Abel a half as a fraction over 8 is 4 over 8 minus 1/8. And in the case of partner Barney had a half, and a half as a fraction expressed over 8 is 4/8 minus 1/8. And partner Car, who's got a quarter, and if I express that as a fraction over 8, it is 2/8. That's a quarter. So Abel has got 4/8 minus 1/8, and that will give him 3/8. The ratio that partner Car is going to get is Car is getting now 4/8 minus 1/8, and that is also 3/8. Partner Car is now going to get his share, which is 2/8. So if I must now conclude now as to what is my solution for the new profit sharing ratio, the partners will share profits in the ratio now of 3:2. And that would be the solution of the first one. So question 1, that would be then the solution of the first one. Are there any questions at this stage, guys? I must apologize for all of this that is happening. I can't even type it out and explain it to you in a proper way, just because I just cannot use the whiteboard on here. But any comments at this stage? Anything that you want me to re-explain? Okay, we are moving back now, and we are on to the next slide now, which will present us with question number 2. In question 2, we've got the example now of Woods and Werner. They are in a partnership trading as WV Stores. They share profits and losses in the ratio of 2:1. They agreed on admitting partner Una, and it was decided that Una would obtain a quarter share in the new business, and the new business will now be called UVW Traders, where Woods and Werner will relinquish the quarter share to partner Una in their current profit sharing ratio. So once again, we are looking for 3 things. We are looking for the current profit sharing ratio. we are looking for the share that the new partner is going to get, and we are looking at how will that share be given over to the new partner. Those are the three things that you are looking for whenever you are taking a look and whether you must calculate the new profit sharing ratio. I am going to get extremely, yeah, okay. So let us take a look at the solution then of the second question then. Once again, I am going to put down question 2. I am going to put down the current profit sharing ratio. I have got two partners. I've got Hoods as a partner, and my other partner is partner Werner. They currently share in the ratio of 2:1, which means that Hoods' share is 2/3, and Werner currently have a share of 1/3. Now that they are going to admit the new partner, the new partner will now be Una, and Una is going to get a quarter share in the business. Now, in order for Una to get a quarter share in the business, Woods, who currently has got 2/3, must relinquish something, which is a minus, must give away something, and Werner, who currently also have a 1/3 share in the existing business, will have to give away something, must relinquish something, so that partner Una can get a quarter share. So let us take a look at what must they give away. Woods must give away a quarter, the quarter share that is given over to partner Una. Werner must give away the quarter share that they must give over to partner Una. But the question states that they must relinquish, give away that quarter share in the existing profit sharing ratio, in the current profit sharing ratio. And the current profit sharing ratio is 2:1, which means that Woods is going to give 2/3 of that quarter share, and partner Werner is going to give 1/3. So you multiply that by 1/3. So that partner Una can now get her quarter share. So just to come back to the mathematical equation that we've got now, Woods has got 2/3. He had 2/3, but he must give away something. And Werner, who had 1/3, will also relinquish a certain portion. And according to the question, the quarter share that partner Una is getting now, Woods is giving 2/3 of that, and Werner is giving 1/3 of that. That is the mathematical equation that we do have there. So if I am now going to simplify this now, I will say partner Woods had 2/3 and will relinquish now a quarter times 2/3 will give you 2/12. And partner Werner, who had 1/3, will give away a quarter times a third is 1/12. So that partner Una can get a quarter share. I've got denominators now of 3 and 12 and 3 and 12 and 4 And that is going to give me a denominator, a common denominator here of 12. So I simplify this further. 2/3 is equal to 8 out of 12 minus 2 out of 12. And that is now for partner Hoods. Partner Werner, 1/3 as a fraction over 12 is 4 out of 12 minus 1 out of 12. That is the share that he is relinquishing. And partner Una, 1/4 as a fraction over 12 is 3 out of 12. So I've got for partner Hoods, 8 out of 12 minus 2 out of 12, that will give him 6. Partner Werner, who has got 4 out of 12 originally, minus 1 out of 12, will give 3 out of 12. And partner Una will also have 3 out of 12. So that is my profit sharing ratio. This can be simplified further. And if you simplify this further, this can also be 2 for partner Woods, 2 parts, partner Werner, 1 part, and the share that partner Una is going to get will then be part. If you simplify that further, giving you then 2:1:1 or 6:3:3. Whether you apply the first one or the second one, both is accepted as correct. Any questions, guys, on that side? On that slide, any questions on that one? Right, we are moving on. I'm still back onto the slides. And we take a look at the next slide. What happened now if, okay, done Woods and Werner already. I'm on question 3. Take a look at question 3 now. James and Kevin, they are in a partnership trading as JK Stores. They share profits and losses in the ratio of 3:1. Profit sharing ratio 3:1. So once again, we are looking for the current profit sharing ratio, and the current profit sharing ratio is 3:1. They decided that they are going to admit partner Larry, and it was decided that partner Larry will get a 1/4 share of the new business. That is the second thing that you are looking for in the question. What is the share that the new partner is going to get? And then lastly, the new business will trade as JKL Stores. James and Kevin will relinquish share to partner Larry in the ratio of 2:3. So what we are looking for is the current profit sharing ratio. We are looking for what the new partner is going to get, and we are looking at how do they relinquish that part then over to the partners, to the new partner. So let us take a look at the solution then of question number 3. So in your worksheets, we are now on question number 3. We have currently got a situation that we have got 2 partners who is in the business. That is James and Kevin. And they are currently sharing in a ratio of 3:1, which means that James is getting 3/4 of the business, of the profits, and Kevin is getting 1/4 of the business. That is the profit sharing ratio. They have now decided that they are going to admit a new partner, and the new partner is partner Larry, and partner Larry is going to get a 1/4 share of the new business. He's going to share and have a 1/4 share of the profits. Now James, who had a 3/4 share, must give away something. He must relinquish something to partner Larry, and partner Larry's share is a 1/4. However, James is only going to give, and go back to the question now to see how is James going to give it. They are going to give it now in a predetermined ratio, and the predetermined ratio is 2:3, which means that James is giving 2 out of 5, 2/5 he is giving, and partner Kevin, who had 1/4, must also give away something, and the 1/4 share that partner Larry is now going to give, to get now, Kevin is going to give 3/5, 3 out of 5 of that he is going to give. And partner Larry will still get his 1/4 share. So just to explain that to you now, James had 3/4. He must relinquish a share to partner Larry. Had 1/4. He will also relinquish something to partner Larry. They are relinquishing the 1/4 share to partner Larry. They are relinquishing that 1/4 share to partner Larry in such a manner, and the way in which they are giving it is in a predetermined ratio, which in the question is 2:3. So Kevin is giving 2/3, and Larry is giving 3/5, 3/5 of that now over to partner Larry. So now we can simplify this now by saying James had 3/4, and he is going to relinquish a 1/4 times 2/5 will give you 2 out of 20. That is a fraction of 2 out of 20. Kevin, who had a 1/4, will have his 1/4 that he had minus the share that is giving over to Larry, and he is giving 3 out of 20 over to partner Larry. And partner Larry will have his 1/4 share. I'm still busy simplifying this now. I've got James, who had 3/4. He is going to give away 2 out of 20. Larry had a 1/4. He is going to give away 3 out of 20. And partner Larry, the new partner, will now get a 1/4 share of the profits. So I'm looking for my common denominator here between 4 and 20. And it can only be 20. And 3/4 as a fraction over 20 is 15 out of 20. So 15 out of 20 minus 2 out of 20. And partner Kevin, who had a 1/4 out of 20 as a fraction over 20 is 5 out of 20. Is going to relinquish 3 out of 20. And partner Larry, who had a 1/4 as a fraction over 20, it is 5 out of 20. So if I must now calculate what is the new profit sharing ratio of this business, who has got James, and Kevin and Larry as partners. James, 15 out of 20 minus 2 out of 20 will give him a share of 13 out of 20. Kevin, who had 5 out of 20, minus 3 out of 20, his share is going to be 2 now out of the 20. And Larry, who's coming in, he will now have a share of 5 out of 20. And that is the answer then for that question. That is the new profit sharing ratio where James, Kevin, and Larry will share in the ratio of 13:2:5. James will get 13 out of 20, Kevin 2 out of 20, and Larry will get 5 out of 20. Okay. Right. Any questions then? At this stage, are we all good? I just want to see whether we've got any questions.
Okay. If Wolfred, sorry, if I could just give some clarity. I see the question about the facet and the clause. This is an official
Yes,
clause, people. It is not unofficial. It is on the UNISA platform. For anybody that, so you can decide where you want to be, but this session will be available to you after the fact. The people that's following these sessions or the lessons as they've been put out, they can decide where they want to be. I've now pasted in the chat the site where you need to join. For those of you that said you don't know where to find notes, you don't know how to join, even if you're from another region, it's fine. You join that Western Cape region site and you'll automatically be getting the updates for every session. And you go click these instructions there. I don't want to take up your teaching time, but you can read all the instructions in the chat that I just posted. But as for the facet of the tutorials, you can either watch the tutorial after the fact and go to the facet. I'm not sure if the facet is recorded. You can check on on your platform. Remember, these sessions are also uploaded. Your lecturer also uploads it to the platform. So either way, you covered. It's just that whichever one you choose, you won't have the interaction of having the person. You won't have Mr. Lesh there to answer the questions when you're watching the recording. So that's it. Okay. So I've posted you a link where you're stuck, where you can't join. Once you join there and you follow that, you won't be excluded from the rest. So I hope I see you all tomorrow, and I won't take up more of the teaching time.
Okay, thank you. Thanks, Claudine. Just thank you for the clarification. Students, we continue. We are taking a look at our next scenario. We are still on. Is there a question?
Yeah, just a quick one. I joined quite late. I'm not sure if I missed something, so I'll just ask you quickly. If you go back to the slide that you gave us, the answer to this last section you've dealt with, I see the fraction you were working with was something over 5. I'm just going to double check with your slide. I know that you used the fraction, it's 1/4 times, so this is with relinquishing from 3/4, you're minusing 1/4 times 2/5. On this question, with question 2, it was, I think it was 1/8 that you times it with. Is it because you...
Can you see the slide?
Yes, sir, I can.
Are you referring to the first one?
Yeah, so with the first example, you had 1/2 minus, then the brackets 1/4 times by 1/2. And then we simplified it, obviously, as the next step with both Abel and Barney. And then if we move to the next slide.
Yeah.
You've got 2/3 minus, then bracket 1/4 times 2/3. I think I missed where you where you decided on what you're timesing that with. Is that what you've
Okay.
read from the notes?
Right. Okay. Okay. I get the question. Just listen carefully to what I'm explaining to you now.
Yes,
The
sir.
2/3. I'm taking you to question number 2, and can you see the slide that I'm working on?
Yes, sir, I can.
Okay. Right. 2/3 is the existing profit sharing ratio. All good. 1/3, that is the profit sharing ratio. So Woods and Werner currently share in the ratio of 2:1, where Woods will get 2/3 and Werner will get 1/3. However, they are giving a share over to partner Una, and that is the quarter that they are giving away to partner Una now. But that quarter that they are giving away to partner Una, you must look at how do they give it away. And if you go to the question, it tells you that the quarter that they are giving away partner Una, they are giving in their current profit sharing ratio. Now, what is their current profit sharing ratio? 2/3 and 1/3. All good? I'm taking you now to the next question. Here we work with James and Kevin. Once again, you've got the 3/4 and the 1/4 is what they currently share. So 3/4 and 1/4 is the current profit sharing ratio. They are giving away something. So in order for partner Larry to get a quarter share, now we say minus a quarter, and for this one also minus a quarter. But now you must go read, how do they give it away to partner Larry? And the question states now that they are giving the quarter share to partner Larry in the ratio of 2:3. So how do they give it away? This one is giving 2/5 and this one is giving 3/5. I hope that explains that one.
Yeah, yes, sir. It's been clarified for me. Thank you so much.
Okay, all good on that one? Right, we take a look at our next slide. So in our next slide, which is question number 4 now. In question 4, now we've got the scenario whereby we have got an existing partnership. However, one of the partners will now has passed away, or even in the case of where one of the partners are retiring, you still work it out the same way. Now let us take a look at this question here. I have got partners A, B, and C, and they are sharing in the ratio of 3:2:1. Partner C has died in a car accident, and A and B has decided to continue with the partnership. A new partnership was formed, but they continued now. They decided to take over partner C's profit share, and they're going to take it over in the ratio of 1:2. Okay, so that is what we currently have. So let us take a look at the solution of that one. So question number 4. First, put down your current profit sharing ratio. So we have got a partner A, and we have got a partner B, and we have got a partner C. And they are currently sharing in the ratio of 3:2:1, which means A has got a share of 3/6. Partner B's share is 2/6. and partner C has got a share of 1 out of 6. That is the current profit sharing ratio. However, partner C is not going to be with the partnership anymore. And now, what is the new profit sharing ratio? A, who had 3 out of 6, is going to gain a further share. So in all the other scenarios that we had, the partners relinquish a share, and that is why it was minus. But now in this scenario, they are adding onto the existing share, and that is why it is a plus now. And partner B, who had 2 out of 6, is also going to gain a certain, he is going to gain from partner C. However, what they are gaining from partner C is they are gaining 1/6, and the 1/6 share that they are gaining from partner C, that is, they gain that in the ratio of 1:2, which means 1/3 will go of that will go to partner A, and partner B, who had 2 out of 6, he is now going to gain the 1/6 share of partner C. However, according to the ratio, he is only going to get 2/3 of that. So if I must explain this to you again, we are now left with 2 partners, a partner A, and we have got a partner B. A had 3 out of 6, is going to gain the 1/6 share of partner C, but he is only going to get 1/3 of that. Partner B, who had 2/6, his original amount there, 2 out of 6, he is going to gain, so it's a plus. He takes over the share of partner C, but he shares only 2/3 of that. So once again, when you get a question like that, you must look for the 3 things. What is the current profit sharing ratio? What is, in this case now, what is the part that partner C is now giving over to the existing partnership? And thirdly, you must take a look at how do they give it over. So now we simplify this now. So this is 3 out of 6 plus 1 out of 6 times 1 out of 3 times 1/3. 1 out of 6 times 1 out of 1/3 will give you 1 out of 18. Just do the maths there quickly. And partner B, who had 2 out of 6, he is now going to get a further 2 out of 18. 1/6 times 2/3 is 2 out of 18. I'm looking for my common denominator between 6 and 18, and that will give me 18, and a fraction of 3 over 6 will give you 9 out of 18, plus he is going to gain a further 1 out of 18, and partner C, fraction of 2 out of 18 will give you 6 out of 18, and he is going to gain a further 2 out of 18. So if I put all of this over 18, A's share out of 18 will be 10, 9 plus 1, and partner B's share is going to be 2 out of 18 plus 2 out of 8, 6 out of 18 plus 2 out of 18 is 8 out of 18. So that will give you a profit sharing ratio of 10:8, or you can simplify that further by 5 out of 5, 5:4. And that will be your solution there in that case. So students, that will take care of the first session then of this module, this chapter, which deals with the change in the ownership structure, the admission or the retirement of a partnership. And the first thing that you must be able to do is that you must be able to calculate the new profit sharing ratio. I've given you the 4 scenarios now that you can get in the exam. First of all, first one, they can relinquish the partnership, or they can relinquish their share to the new partner equally, or they can relinquish it in a given ratio, or they can relinquish it in the current profit sharing ratio. And in the 4th instance, you can also have the situation whereby one of the existing partners either retire or he will pass away, which means that the other partners will gain his share. Right. We move on to the second part now of this study unit. And I'm back onto the slides now. On the slide now, let us talk about valuation adjustments. Now, when we've got the scenario that a new partner is going to join an existing partnership, it is possible that that partner will not be satisfied with the value of the assets of the current partnership. Because it may be that the current partnership will show a vehicle as a value perhaps as 200,000 Rand. Now, when the new partner joined the partnership and he have a look at the vehicle, then in his mind, he will say to himself, no, man, this vehicle is not worth 200,000 Rand. Then the partners will come to some sort of an agreement as to what is the value of this vehicle now. If they cannot agree upon a value, then they will normally call in a valuator from the bank to give a realistic value of the asset. So the same will apply to all the other assets, whether it is equipment or whether it is furniture or whether it is vehicles or whether it is the inventory. So all the assets of the existing partnership must be revalued as agreed upon amongst the two partners. And for that purposes, we will create now a valuation account. A valuation account is created in the ledger, and that valuation account will deal with the increases in the and the decreases in the value of all the assets and the liabilities. Once the valuation account has been prepared, the balance in your valuation account is called now the profit or the loss on valuation. It's called the profit or the loss on the valuation. And that profit or loss on valuation is shared amongst the partners in the profit sharing ratio. So, to summarize this quickly, when a new partner joins an existing partnership, you may not be happy with the value of assets and the liabilities of that partnership, and therefore the assets and the liabilities needs to be revalued. A valuation account is drawn up now to deal with the increases and the decreases in the value of the assets and liabilities. The balance of the valuation account is called the profit or the loss on valuation, and that is shared to the capital accounts of the partners in the profit sharing ratio. Let us apply this now to a question that I've got here for you. And this is now question 5 in your notes. I've got Peter and Penny. They are in a partnership. in an entity called PP Stores, and they share profits and losses in the ratio of 2:1. They have now decided to admit a new partner, partner Pascal, into the business now, and he will join on the 1st of February 2018. The new business will now be called PPP Stores. The following is an extract from the list of balances on the 1st of February. My equipment is 85,000, my vehicles is 300,000, inventory is 62,000. The two capital accounts are 400,000 and 300,000 respectively. In preparation for the change in the ownership structure of the existing partnership, the following fair values of the assets were obtained. Equipment. Now take a look at equipment. Equipment at the value of 85,000 in the books of the partnership. Equipment must now be revalued at 64,000. The vehicles, who's got a balance of 300,000, will now be revalued at 240,000. And my inventory, that has got a balance of 62,000 in the books of the business, must now be revalued at 95,000. The question asks you now, prepare the valuation account and prepare the capital accounts of the partners. Right. I'm taking you back now again to the workings, the file that you've got on workings, and we are going to, I'm going to do this activity then now with you. Go to your worksheet, and in the worksheet now, question 5. We are going to do the valuation account, and I have also asked you to do the two capital accounts of the partners. I'm just going to do that quickly here. I must do the capital account of partner Peter. And I am also going to do the capital account of partner Penny. Right. The capital account of partner Peter has started off with a balance. Remember, it is an equity account with a credit balance here, and the balance was the amount of 400,000 Rand. And the capital account of partner Penny has started off with a new balance, with an old balance, not the new balance, the old balance, and the old balance here was 300,000. Right. Now the new partner that is joining the partnership now, he has now, together with the other partners and perhaps a valuator, had a look at the accounts here and the assets of this partnership. In the books of the business, the equipment account has currently got a debit balance of 85,000. The partners has now agreed that the new fair value of your equipment will be 64,000 Rand, which means that the value of your equipment will have to decrease by 21,000 Rand from 85 to 64,000. In order to account for that, the equipment account must decrease. And if equipment decrease, you must credit the equipment account. So you credit your equipment account with valuation account, And your valuation account is therefore now debited here with equipment. And the value of that equipment is going to be 21,000 Rand. So just to explain that now, your equipment account will have to decrease. Currently, it is at 85,000 Rand. We want the new balance to be 64,000 Rand. So to decrease your equipment, credit equipment, and to debit the valuation account. The second asset that must be revalued, second asset to be revalued, is the vehicle account. In the books of the business, the vehicle account has got a balance of 300,000 Rand. The new balance must be 240,000, which means that the vehicle account will have to decrease by 60,000 Rand. If we decrease, you must credit the vehicle account and you debit your valuation account here with vehicles. And the amount of the vehicles, the amount that the vehicles must decrease with is an amount of 60,000 Rand. The third asset that we must now revalue is our inventory account. Now, in the books of the business, the inventory account is currently, it has got a debit balance there of 62,000 Rand. The new value must be 95,000 Rand. The value of inventory must increase. To account for that, we are going to debit the inventory account. It's an asset to increase on the debit side. Debit the inventory account, and we credit the valuation account now with inventory. And the inventory account will have to increase by 33,000 Rand. So now we have recorded all the increases and the decreases to our assets and our liabilities. We have indicated that now in our valuation account. Once all the increases and the decreases has been accounted for, we close off the valuation account now. We close it off. And our valuation account has got two debit entries, 21,000 and 60,000 Rand. And on the credit side, there's an entry for 33,000 Rand. So we are going to calculate now what is the difference between the two sides. 21,000 plus the 60,000 will give you 81,000 minus the 33,000 will give you a 48,000 Rand difference between the debit side and the credit side. That 48,000 Rand is now called the loss on the valuation. The loss on the valuation is now shared amongst the partners in the profit sharing ratio, and the profit sharing ratio is given to you as 2:1. So I am going to credit the valuation account with capital account of partner Peter, and partner Peter's share in the 48,000 Rand that is now shared in the ratio of 2:1, which means that you will get a 2/3 share of the 48,000 Rand loss, and that will be 32,000 Rand. We transfer to the capital account of partner Penny his share of the loss, and he has got a 1/3 share So his 1/3 share of the 48,000 rand will amount to, my calculations is wrong, that is 32,000. Apologies for that. That must be 32,000. And the 1/3 share here that will go to partner Penny is an amount of 16,000 rand. My valuation account will therefore close off with the amount of 81,000 rand on the debit side and 81,000 rand on the credit side. If I transfer those losses now to the capital accounts of the partners, on the debit side of the capital account of partner Peter will now be valuation, and we transfer to Peter his share. 32,000 rand is his share of the loss, and in the capital account of partner Penny, I will have a debit entry from the valuation account. I have transferred his share of the loss of 16,000 rand. So any questions on that one? So what we've got there is the following. We have got two partners. Okay. A new partner is going to join the partnership now. When a new partner joins the existing partnership, all the assets and the liabilities must be revalued. And in this question, we had seen that there were 3 assets to be revalued. Equipment, vehicles, and inventory had to be revalued. Ipamandla, I'll be with you now. 3 assets to be revalued. For that purpose, we have drawn up the valuation account to deal with the increases and the decreases in the assets and the liabilities. The difference there, we have closed off now to the partners' capital accounts in the profit sharing ratio. Right, Sipamandla, you can ask your question.
Thanks, sir. Thanks for allowing me to ask a question. I just wanted to know the valuation account. Do we take it as an equity account or as an expense account, or is just the account that helps deal with this admission or the retirement of a partner? It doesn't really have to be an equity or an expense account.
That is correct, sir. Your last statement is absolutely correct. The valuation account does not fall under assets, equity, liability, income, or expenses. It is just an account that is assisting you in dealing with the valuation or with the revaluation of your assets. In FAC1601, we had a similar account that was the asset realization account, which was not an account that is located under assets, equity, or income, or expenses, or liabilities, nothing at all. It was just an account that assisted you with the selling of the asset. The same applies now to your valuation account. You create a valuation account and then you must close it off immediately.
Okay, thank you, sir.
Right, Charles, you can shoot.
So just following on that, will it then have an influence, or can it have an influence at some point on the value of these assets? Is that what revaluations later, like I'm thinking of the notes in the financial statements of financial positions and so on. Will we at some point actually revalue them up or down according to this?
That is correct. Can I just explain it to you? If you must now prepare a statement of financial position, your equipment will not be 85,000, but your equipment will be 64,000. because your equipment account has a debit balance of 85,000, but due to the revaluation, the equipment account was credited, decreased by 21,000, and the new balance of equipment is now 64,000. Does that answer the question?
I think so, sir. So even though a new partnership is formed, the books will continue from the old partnership going on. So they will simply be adjusted to compensate for.
Okay, right. Not really. The books of the existing partnership must be closed off also, and a new set of books must be formed. However, in the new partnership, the asset will not go over as 85,000, but in the new partnership, the asset will go over as 64,000. Does that answer the question?
Yes, thank you. No, I think that was what I was trying to reconcile is how it is revalued when essentially the old partnership ends and a completely new partnership is formed. So okay, yes, that it gets revalued up or down and transferred in that way according to the new value.
So just to summarize that, when a new partner joins an existing partnership, the old partnership ceases to exist. The books of the old partnership must be closed off. A new partnership will be formed with a new set of records. And if I take you back now to the example of equipment, in the new partnership, equipment comes into the new partnership at a value of 64,000. Okay. Any other questions on the valuation? Right, we continue with our slides. We are into the third section now of this study unit. And the third section of the study unit deals with the aspect of goodwill. Now, we are busy with the chapter of a new partner coming in and joining an existing partnership. The existing partnership, you must remember now, over the years has built up a reputation and has got an existing client base. And the new partner will not join that existing partnership if he don't know that the partnership will make some sort of a profit. So in the existing partnership, there is a reputation, there is future profits, okay? There is an existing client base, and all of those things will count to what we call the goodwill of the business. Now, when a new partner joins an existing partnership, the goodwill must be created in the books of the existing partnership. Goodwill is classified as an asset. You take it to the statement of financial position and you show it under non-current assets. So as far as our goodwill is concerned, to record goodwill in the books of the business, you debit the goodwill account because it's an asset, and you credit the capital accounts. You credit the existing partner's capital accounts, but in the profit sharing ratio. What is important for you in this course is that you must know how to calculate the goodwill. So the calculation of goodwill is the following. It is the capital contribution of the new partner. So you must look at what does the new partner bring into the business. Remember now, the partner can bring in a vehicle, he can bring in cash, or any other non-current asset. So all of that will be added together, and that is his capital contribution, not only the cash. Whatever he brings in, that is his capital contribution. You multiply that by the inverse of his share in the net assets of the new partnership. The inverse of in the share of the assets of the new partnership. So read the question and see what portion of the net assets the new partner is acquiring. If he gets a third interest, the inverse of a third is 3. So you will take now for the first part of the calculation, the contribution times 3. If he gets a 1/5 share, the inverse of 1/5 is 5/1. Right, all good on that. So that is the first part. The capital contribution of the new partner times the inverse of his share in the assets of the new partnership. Get that amount, and then we say minus. We subtract now the equity of the existing partnership. Now, the equity of the existing partnership is equal to, remember now, in the first lecture, we discussed this now. The equity of the existing partnership is the capital account of both partners plus the current account of both partners plus any reserves. That makes up the equity of the existing partnership plus the capital contribution of the new partner. So once you've got that, you subtract that now from your first answer, and that will give you your goodwill calculation. It's the contribution of the new partner times the inverse of his share in the assets minus the equity of the existing partnership plus the capital contribution of the new partner. That is how we calculate the goodwill. Let us apply this now in a question. And I've got a question there for you. I've got two partners, King and Larry. They are in a partnership trading as KL traders. They share profits in the losses in the ratio of 3:1. They decided to admit a new partner, Mervyn, to the partnership, and Mervyn had to pay 120,000 Rand for a 1/5 share in the fair value of the assets. Mervyn will also obtain a 1/5 interest in the profits or losses of the new partnership, and the new partnership will now be called KLM Traders. On the 31st of December, the books of KL Traders were closed off, and at that date, the following items appeared in the statement of financial position. We've got the capital accounts, 200,000 and 120,000 respectively. The current account of King was 1,600 and that of Larry 22,400 Rand, and there was an asset replacement reserve of 40,000 Rand. The question is now, they ask you, calculate what is the goodwill of KL Traders in preparation for the admission of partner Mervyn. I'm taking you now to the worksheets again. And in the worksheet, we are now on to question number 6, and we are going to calculate the goodwill. To calculate the goodwill now, we will say that the goodwill is equal to whatever the new partner is bringing into the partnership. So we take a look at his capital contribution, which is 120,000 Rand, times the inverse of his share in the assets, and you get a 1/5 share in the assets, and the inverse of that would be 5. So it is 120,000 times 5 minus the equity of the existing partnership. Now let us take a look at the equity of the existing partnership. The equity of the existing partnership will be the capital accounts of the two partners And if we take a look at the capital accounts of the two partners, will be 200,000 plus 120,000, and that will give you 320,000 plus the current accounts of the partners. But be careful now, because the current account of partner King has got a debit balance of 1,600 Rand, which is a negative balance, whereas the current account of partner Larry has got a 22,400 Rand positive balance. So if I want to calculate the equity of the existing partnership, it will be the capital accounts plus the current accounts of the partners, and the current accounts of the partners has got a balance of 20,800 Rand plus any reserves, and the reserves is 40,000 Rand because I've got an asset replacement reserve there of 40,000 Rand plus 120,000 Rand. So just in terms of the formula states there that to calculate goodwill, it is the contribution of the new partner, which is 120,000, times the inverse of his share in the assets, which is then times 5, minus the equity of the existing partnership, which is the capital, plus the current accounts, plus any reserves, plus the contribution of the new partner. So if I want to calculate now what is my goodwill will be 120,000 times 5, which is 600,000, minus the equity of the existing partnership, which is 320,000, plus 20,800, plus the 40,000. That is the equity of the existing partnership, plus the contribution of the new partner, which is 120,000 Rand. And that will give you 500,000 and 800 Rand. So my goodwill will be the amount of 99,200 Rand. That is my goodwill then, and the solution then to question number 6. Can I have any queries, any questions on that one? All okay with the calculation of goodwill?
If you can just repeat it for me, please. I think I missed a beat somewhere because I get to 139,200.
Okay. 139,200, it means that you didn't take into account the asset replacement reserve, which is part of equity.
I see it. I see it. Thank you so much.
All good, Charles? The equity of the existing partnership consists of the 2 capital accounts, the 2 current accounts, and the asset replacement reserve.
I see it.
Any
Yes.
other
Thank
questions?
you.
Okay. So guys, just to summarize this, what we have covered so far in this study unit. In this study unit, you must be able to calculate the new profit sharing ratio. You must be able to do a valuation account, and you must be able to calculate the goodwill. This is what is all under the section called admission and retirement of a partner. So I'm taking you to the notes now, the notes for lecture number 3. Let us just quickly go through that. Right, in my note on page 1, I say there we are dealing with the changes in the ownership structure of a partnership. And remember, in my introduction there, I say that the change in the ownership structure can only be due to either admitting a new partner or one of the existing partners retiring, or in the case of death of a partnership, of one of the partners. Okay. Under number 2, you must be able to calculate what is the new profit sharing ratio with the different scenarios. Remember, they can relinquish the profit share according to a previous profit sharing ratio, or they can relinquish it now in an equal ratio, or we can get the situation whereby they relinquish that partnership now in the profit sharing ratio that existed between them. Or we can even have the scenario whereby one of the partners has passed away and the other partners take over his share. Under number 3, we discussed valuation adjustments. Remember, upon the admission of a new partnership, all the assets and liabilities of the existing partnership must be revalued. A valuation account is created, and the balance of the valuation account is then closed off to the capital accounts in the profit sharing ratio, and that is called then the profit or the loss on the valuation. Number 4, you must be able to handle the goodwill, and you must know how to calculate goodwill. And remember the goodwill, that formula, you must know that formula. And then we move on to a question that I've got there for you, which is the May-June 2011 paper, where we've got 2 partners. They give you all the information there, and take a look at your required now. Under 2.1, they ask you calculate the goodwill. Under 2.2, they ask you prepare the valuation account. And under 2.3, they ask you to calculate the new profit sharing ratio. So that was a question for 20 marks, which covers everything that you need to know on this study unit. So just to summarize that, guys, that is your admission and retirement of a partnership, where you must know the new profit sharing ratio, valuation account, as well as the goodwill. Right. That is the end of my session. Just a request once again, Claudine has sent to you guys through the attendance register that you must complete the attendance register as well as the feedback. And those of you that still has got problems and can't get the notes, once again, there was another link posted now to the notes. And please, guys, in order to assist yourself and make life easier for you, you need to download the notes well before the time, print it out, and then it will be so much better if you can do it like that. Right, I've got 2 questions. Sipamandla, you can shoot. Tell what's your question.
Okay, yes, sir. Can you just show me again the total of the goodwill, how much it was? Because I'm getting a different answer, but I just want to see yours there.
Okay.
Because me, I'm getting, I think.
It's 99,200.
Okay,
I'm just going to show you that calculation quickly. Just let me know when you are happy with that.
Because you see. Okay.
Yes, I'm listening.
Okay, so what I did is I said 120,000 times 5. Then then I said minus the 200,000 of the capital account and the plus 120,000 of the capital account. So that together they make about 320. Then I included the difference of 22,400 with minus 1,600. Which is the capital accounts. Then I added 40,000 rands. Then I plus the 120,000. So I'm getting a number that is about 339.
Okay, right. Okay, I know where the problem is. You need to understand that the calculator is a little bit more clearer than what we are. So the calculator works on BODMAS.
Oh yeah. Okay.
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 that
So
is
it's
why
basically just BODMAS.
That is why I put that stuff in brackets. You see the square brackets that I've got. You must first get 120,000 times 5. You must first get that answer. Then the other portion in the brackets, you must get that answer, which is 320 plus 20,800 plus the 40 plus the 120. First get that answer in brackets, and then you subtract.
Okay.
All good?
Okay, no, that's all good. I just put the brackets now. Yeah, it just worked like that. So yeah, BODMAS. Yeah, you are right. So we need to really be aware of that all the time when we're putting these things. Okay, thank you.
Okay. Now we've got June.
Okay, so I just want to ask, with the valuation, we shared the loss amongst the partners. And what do we do with the goodwill? Do we leave it like that, or it goes to the, equity, or it is shared also against between the partnership?
Okay, right. In the question, I didn't ask you to show the goodwill account in the ledgers. I just asked you to calculate the goodwill. But let me quickly show that. That's a good question. Can I take you back now? I'm going to go back to the worksheet now, and I'm going to show you now how to record that now in the books of the business. Okay, so I'm going back now to my worksheets. And if I must now record the 99,200 Rand of goodwill now in the books of the business, and remember, the existing partners, they share in the ratio of 3:1. So you will take the 99,200. Let me just quickly take times 3 divided by 4 now. And I will have the following. To record the goodwill in the books of the business, goodwill is an asset. I'm just going to show you the journal entry now. I will debit the goodwill account of 99,200 Rand. I will credit the capital account of partner Peter, partner King. This is partner King. And his share of the goodwill will be the amount of 74,400. And I will credit the capital account of partner Larry. And that will be 24,800 Rand. So June, will that answer your question? If I must now create and record the goodwill, I will debit the goodwill account and I credit the capital accounts of the partners in the existing profit sharing ratio, which is 3:1. That's our profit sharing ratio. And King's share of the goodwill will be 3/4, and Larry's share of the goodwill will be 1/4. Will that answer the question?
Yeah, so the new partner won't get any share in this goodwill.
No, because the new partner, he has just joined now. He can't get, you remember what is goodwill? Goodwill is the reputation of the business. He didn't play any part in the reputation. He's only joining now. He cannot share in that.
No, I get it, sir. Yeah, I get it.
Okay.
Okay, sir.
Right.
Thanks.
Okay, any other questions? I think we are all good. Okay, guys, enjoy the rest of the evening then. Enjoy the rest of the evening. And I hope that, and I'm sure that we will be able to sort out all the gremlins that we had to tonight. Once again, I apologize for all of that. And please, guys, Get now the notes for tomorrow's session. Tomorrow we are starting again at 1 o'clock. That will be lecture number 4. So please get yourself ready, and it's in your best interest to make sure that you've got all of that. Okay. Right. Good night, guys, then, and enjoy the rest of the evening. Bye.
Good night, sir. Thank you.